there is a really high chance that we will see a fill of the CMA gap despite the recent perfect sell side setup. Welcome back everyone. Today we are taking a look at the Hyperliquid coin, and we are seeing a really good momentum forming here where price is actually should go to the downside movement. So we had a nice breakdown here after this huge bullish momentum. We formed a nice neckline was broken, then we went for the retest. We see the first retest was successful. We went for the downside movement, almost perfect, as we were about to form the market structure break here on the smaller time frames. But then we had a reversal, and now what's happening? Price is again pushing to the higher zones. Now, if this wouldn't be happening, or if we would see some sort of rejection from here on right now, what we would do is go for some kind of setup like this, wait for a proper downside movement, and then just glide the trend up until this area here. So let me get the box, this zone basically. Actually, we will even narrow down to this area. So like 19% of market price movement, and the risk and reward ratio is basically 1 to 4, we can call it. But what's right now happening, we see that the buyers are actually pretty dominant here, so we might see a different kind of scenario where price just goes for a liquidity grab to the upper zones, filling this upper bullish CME gap here, and then goes for another attempt potentially to secure this downside movement. But then the entry would be slightly different. So if we would see this kind of movement that price goes to upper zones, then first entry would be this area here with the stop loss and target being pretty small. So stop loss would be pretty close to this area here, so closer to the EMAs, and target would be just 8%, so risk and reward ratio is like 1 to 2. But the other setup that we will be looking for, actually we'll take this one here, is once we break down from the local low zone, we might go for a smaller setup, which would be basically same risk and reward ratio, would assume. So 1 to 3, 1 to 2 risk and reward ratio. So two potential setups that can be taken if we see the bullish overtake of the CME gap. So right now the odds seem pretty fair, so I would say that we should go and fill this CME gap. Let's see, we had another rejection here, pretty strong one after the strong liquidity sweep, but then buyers once again are showing the dominance. So going to the hourly time frame, there is a small chance to take the long position from here if we see that the buyers secure this zone, but then we have to see like this kind of movement, so a breakdown, retest, breakout, retest, and then a further movement to upper zones. So not just a plain breakout like this. If there will be a plain breakout like this, a candle would just be like that, going to market as this and that. If it will be just like this, then there is no logic behind it, because most probably we'll just go with the same way down. So we might even see something like this candle. So that's the game plan that we are expecting. There is a chance to take a smaller long position on the hype right now, but I wouldn't say that that's worth the trouble. So anyways, that's it for today. If you like this video, feel free to leave a comment, and I will catch you tomorrow.